Hello, everybody. My name is Dan Wickman, and I'm your in-house benefits consultant for Home Instead under John Hudnall in Fremont. Hope you're having a good day so far. The whole purpose of this video is to review the employee benefits package that John and your management has made available to all of you. Now, before I jump into the actual programs and products themselves, I want to take a second and just review with you the overview of right now what's going on in the economy. So in my time in employee benefits, which is about 8 years now, I've dealt with a lot of different employers. And one thing that I've seen in a lot of different markets is that right now it's extremely difficult to provide a quality employee benefits package. In fact, because of some of the restrictions and changes that have happened with the ACA, it's actually very difficult and expensive for an employer to provide any kind of package whatsoever. And what we're seeing right now is that more and more employers every single day are actually shifting away from making employee benefits available. Now, while that's been going on, I've had several conversations, and when I say several, I mean closer to dozens of conversations with John Hudnall regarding all of you and regarding his intentions with helping just facilitate you with different programs and things that you would want and need for your family. And John has been extremely proactive on the attitude that he wants to make sure that each and every one of you is empowered with the tools to design your own employee benefits package. I want to point that out just because whether or not you participate with this is up to you. However, I think it's really cool that while the trend in employee benefits is actually shifting negatively, you right now are working for somebody who is being very positive and being extremely proactive when it comes to your employee benefits. So it's pretty cool. Thank him if you get the chance. What we're going to do today is we're going to talk about 3 different options that you all have available to you. The first program we're going to talk about is health insurance consultation. So this is actually something that's fairly new, and we've embodied it with a couple of different platforms. And essentially what it is it's going to allow you to, if you do not have health insurance in place, it's going to allow you to compare what's out there and possibly put something in place for you. If you do have health insurance in place, it's also going to allow you to compare rates and compare coverages and potentially put a better program in place. So, starting there, really there's people fall into 3 different categories when it comes to health insurance today, especially in Nebraska. Either you're somebody who has health insurance in place that you're paying an absolute arm and a leg for the premiums, and you're having to make financial changes at home because you just can't afford to take care of the coverage. And every single year those rates go up, and every single year you're trying to find alternative ways to help cover those resources. Essentially, you have health insurance, but you can't really afford to pay for it. The second category of people that we see today in the economy is that they have health insurance in place, but ultimately the deductible and the max out of pocket and the co-payments and the co-insurances are so high that at time of claim they really can't afford to use it. And so it's true that they do have health insurance, but if they ever have to use it, and if they are ever hospitalized especially, or if anything severe ever happens to them, like a severe sickness or a severe accident, they cannot afford that deductible. They don't have $5,000 laying around. They don't have $10,000 laying around. And that's how people find themselves in a really bad scenario financially. And then the third scenario is there's just no health insurance in place. Maybe you don't have health insurance because you haven't known where to go to get it. Maybe because you fell into the first 2 categories. You couldn't afford the premiums, and the policies you could afford just didn't make sense to you. You just didn't have it. Or maybe you're on state aid. Maybe you're on like a Medicaid program, and you're kind of limited because if you work too many hours, you're obviously going to lose those benefits, and then you're not sure where to go to cover your family or yourself. Now, the neat part about what John has for each and every one of you is that if you do fall into one of those 3 categories, you can sit down directly with me, and we're going to evaluate what you have, if you have anything, and we're going to compare it to what's out there. Here's what I know, given my time in health insurance, is that right now there's literally thousands of policies out there. And a very small percentage of those policies are actually good policies. The majority of them are junk. They're not going to do what you think they would do, and unless you have a degree essentially in insurance, it's going to be very hard to distinguish those. So we only work with the good policies. We only work with policies that are going to step up for you at the time of claim, and they're going to help you out. Obviously, if you're hurt or sick on bigger things or little things, we have policies with very low deductibles. We also assist people in utilizing the exchange. So for those of you who are looking at a Medica policy, or are maybe on a Medica program right now, we can help you tap into the exchange and traditionally also help you find some pretty crazy good subsidies. That's one thing I also want to point out. In Nebraska, the subsidy system is actually very, very, very high, meaning you don't need to make very, very little money to get subsidies. In fact, if you're an individual who makes under $50,000 a year, you probably have a subsidy. If you're a family of 3 who makes under $70,000 a year, you probably have a subsidy. If you're a family of 5 who makes under $90,000 a year and claims under $90,000 a year, you probably have a subsidy. So I definitely want to, if you do fall into those categories, help you take advantage of the system that you have right now and help you find which programs make the most sense, and also put you in a program that's going to be in your network that's going to help you use the coverages that you have available to you. So that's the first program you have. Absolutely take advantage of it. I'm going to be consistently throughout the year meeting with people as they come across different challenges when it comes to their health insurance. So don't hesitate. Don't resist talking to me. We do not have loyalty to one carrier, meaning we're not just going to push a product on you to make a profit. We work with all the carriers, and we're going to do what's in your best interest at the end of the day. That's one of the biggest reasons why we struck up such a good relationship with John and with your company. So if you have questions on health insurance, definitely touch base with me. The second program we're going to talk about is something that John's actually making available to every single one of you, and it's called MeMD. So what MeMD is it's a teledoc system, and it allows you 24/7 access to AMA medical professionals and helps you avoid unnecessary uses of the health insurance system. For example, I'm sure every single one of you have at some point in time been in the scenario where you or a family member is sick and you know exactly what it is. You know it's a sinus infection, strep throat, the flu, an ear infection, something like that, where you know what it is. You also know that you're going to need an antibiotic to get over it, or you're going to have a long road ahead of you. So you don't necessarily want to go get that antibiotic, because you also know that you're going to have to go to urgent care or to your primary care provider, pay possibly $150 in out-of-pocket expenses just to see that doctor for about 5 minutes and get that script that you knew you needed all along. What this program will do is, if you do fall in the scenario, or if anybody in your family falls into the scenario where, like I said, you have something where you know what it is, you can, or not even if you know what it is, it's just maybe you just want some kind of consultation without having to go to the doctor. You call into this program called MeMD, and you'll get patched through almost immediately to a professional nurse, and they'll ask you some questions. They'll run through a few things with you. Based on your symptoms, they'll patch you through to an AMA certified physician, and based on, again, those symptoms, as long as the antibiotic is a non-narcotic medication, they'll traditionally be able to just ask you, what your zip code is, and they'll say, we see there's 4 different pharmacies within 5 miles from here. Which one would you like me to send it to? They'll send it to the pharmacy of your choice, and then the only cost to you is a $25 copayment when it comes to those services. So it's extremely useful. This is something that we see a lot of people pay, sometimes between $10 to $20 a month just for the program, just to have access to the program. And this is something that John is providing for each and every one of you after your probationary period to have for you and your entire family. So it's an extremely, extremely useful program. If you're not signed up for MeMD right now and you have been past the 60-day probationary period, definitely touch base with me. We'll get you enrolled in this program immediately, and you'll have this to use for you and your entire family. So definitely take advantage of it. If you're not in MeMD right now, touch base with myself, touch base with John, touch base with Carly. They'll get you the proper or they'll get me the proper phones, and we'll get the program put in place. So pretty cool. Finally, the third piece of the puzzle and of your employee benefits that all of you have available to you is a voluntary benefits platform provided by AFLAC. So there's supplemental benefits. For those of you who are not familiar with supplemental benefits or how they work, or how AFLAC works, essentially the best way to describe what they are they're programs that if you get hurt or sick, they do not pay doctors and hospitals. They pay you. So obviously you get hurt, you get sick, health insurance kicks in, pays doctors, pays hospitals, and leaves you with an out-of-pocket expense. Like we talked about before, it leaves you with a deductible to worry about. It leaves you with co-payments. It leaves you with co-insurances. It leaves you with a big max out-of-pocket to be concerned with. What these programs will do is they pay cash directly to you, and you can do whatever you want with these programs. So you can use it to pay the doctor, you can use it to pay your deductible, you can use it to pay your co-payments, you can use it to pay your rent, your mortgage, go grocery shopping with it, pay your car payment, whatever you want to do. It's not a loan program, it's not a credit program, it's literally cash paid directly to you, and you can use it however you want to. These programs are guaranteed renewable, and they have rate stability, meaning no matter how much you use them, no matter how hurt you get, how sick you get, how much you take and claim, they can never change the rate on you, and they can never drop you. So it's really important to remember, because a lot of times with programs like these, and right away car insurance comes to mind, the more you use it, obviously the higher your rates go. With these programs, you are not punished for using it. The more you use it, the rates stay the same. You're not punished. We went with AFLAC because they're the #1 carrier when it comes to voluntary benefits and supplemental benefits. They also have an extremely user-friendly claims system, very easy to make claims, and the majority of claims they pay out in about 1 day, and they direct deposit that money into your bank account. So it's very easy to take advantage of the programs. They work with about 50 million people, and they pay out an average of $6 million every single day in claims. So it's pretty cool how much it gets utilized. And again, John was very upfront with making sure that any employee benefit he brought to the table, he wants it to be the best, and he wants it to really step up when you need it. So it's pretty cool. I'm going to run through some of these programs with you. If anybody has any questions throughout this presentation, obviously, write them down, touch base with me afterwards, touch base with Carly, with John, with whoever you need to get them in my hands, and we'll obviously meet face-to-face for those of you who have questions or want to look at different programs. Also, the average cost of these programs, just so you're aware, is traditionally between $6 to $8 a week for an individual. And for an entire family, you're probably looking at closer to $8 to $11 a week. So they're meant to be affordable. They're not meant to break your bank. And most people put probably between 1 and 3 programs in place. So again, it's not meant to cause you a lot of financial stress. Also, and this is another cool thing that John's doing just to kind of separate himself from all the other employers out there, not only is John making this available to you, but for full-time employees and for people who've met a full-time capacity for a set amount of time, and John and Carly can talk to you about who that is, you actually have a match from John of up to $50 a month. So essentially what we're going to do is we're going to look at what you took out, and then John's going to help you spend half of that or help pay for half of that up to $50 a month. So we'll talk a little bit more about that in person, but it's pretty cool that he does that. Again, these programs are available to everyone. You do not have to be full-time to participate with them, but for those of you full-time employees, you do have that match. And for those of you who are close to full-time, I would definitely touch base with Carly or John and see what you can do to boost your numbers up a little bit and take advantage of the match that John's giving you. So starting out with this kind of blue-grayish policy, this is short-term disability. All right, so this is probably one of the more important programs that John's made available to you. The way short-term disability works is this is your paycheck protection. So this literally, if you're ever hurt or sick outside of work and can't come into work, that injury or sickness is preventing you from working, this will step in and help you replace your paycheck. There's really 2 reasons why people like it. Number 1, it's a guarantee issue. So for those of you who maybe have something going on that traditionally for a short-term disability policy would prevent you from enrolling in it, this program everyone can get. Doesn't matter what you're going through right now. Doesn't matter what you've gone through in the last year. Every single person can take this out. There's a 1-year look back, meaning if you're right now, let's say you blew out your knee in the last year, and now the doctor says you have to have knee surgery. In the next year, that knee will not be covered, but everything else will. So as long as you haven't seen treatment for it in the last year, it is covered once the policy is in place. The other reason why people like it is because you can set it up however you want to. So traditionally, short-term disability is on a take it or leave it mentality, meaning this is what it is, this is what it's going to cost, no matter what. This short-term disability, you can set it up so it fits your budget, and it actually literally fits whatever you need it for. So when we are talking to people on whether or not short-term disability is a fit, we always ask them, ask yourself, if you were hurt or sick and couldn't come into work, how long could you go from a paycheck or without a paycheck from Home Instead? For those of you that the paycheck that you receive from Home Instead is one of your main sources of income, and maybe you answer that question, I couldn't go very long. I couldn't go a couple days. I couldn't go a couple weeks. I couldn't go a month. I would say to definitely touch base with me. We can set this up however you need to. So for those of you who have a rainy day fund set aside, you can literally set it up so it goes a couple weeks, but if you're out of work for post those couple weeks, it's going to step in and pay you. Obviously, that's going to change the cost, but ultimately, if that's what you need it for, you can tailor it that way. The best way you can have it set up is so it has a 0-7 elimination period, and it protects a full 60% of your paycheck, and that's your gross pay, meaning that your taxes are essentially taken out of it, and it's going to be as close as possible to what your take-home pay actually is, which is really nice. So you're not going to feel like you're missing part of a paycheck. But when you think about a severe sickness or an injury, or even a little one, you got to remember that not only are you going to have an increase in expenses because you have your deductible to worry about, or you have your out-of-pocket or co-insurances that now you're paying for, you also have your your rent, your mortgage, your utilities, all those things that don't stop. If you do fall into that category where the income from Home Instead is very important to you, this is a policy that we definitely want to talk about. So make a note, talk to Dan about short-term disability if you do fall into that category. The next program we're going to talk about is the accident policy. That's this kind of brownish grayish policy. This is probably the most popular policy we offer. So if you ever talk to somebody who says, I have Aflac, I love it, it really steps up at time of claim, it did a ton for me, and it's not very expensive, they probably have the accident policy. There's two reasons why people like this policy. Number one is because the affordability is very, very low. For an individual to take this policy out, it probably costs them about $6 a paycheck, or actually $6 a week. For an entire family, you're looking at closer to probably $9 or $10 a week. But ultimately, it's extremely affordable. With that being said, the threshold to make a claim is also very, very small. Meaning, as long as you get hurt doing something and see somebody about it, it's almost always a claim. So that's literally the threshold that we look at, or that Aflac looks at, is did you get hurt doing something and see someone about it? A good example of a very small claim. I was, working in the garden, and I stood up and I twisted weird, and I hurt my back. You got hurt doing something. You were gardening, and you hurt your back. So as long as you go to see somebody, so as long as you go to see a doctor or a chiropractor, let's say, it's always going to pay out. The minimum it pays out, as long as you see a doctor or physician within 72 hours, is $120. So let's take that other scenario. Let's take that scenario where you were working in the garden or lifting something at a client's house or something like that, and you hurt your back and you had to go to the chiropractor. Even if you have a bad back and you have a history of back injuries or what have you, as long as the injury occurs while the policy is in place, it's always a claim. Now, we don't coordinate with benefits, meaning that even if you're paying the chiropractor, let's say $45 in a copayment, or insurance is taking care of the visit, this policy is still going to pay out, and it's going to pay out $120. We have people who use this policy on a monthly basis for little injuries like that, for little injuries with a chiropractor. Those of you with kids, they're getting hurt all the time, and you're having to run into urgent care just to get told that everything's okay. All of those are claims under the accident policy, and given the low amount of premium that it requires on a paycheck per paycheck basis, traditionally, or a lot of times, people can pay for the policy throughout the year on little things, and obviously not be out of pocket that much for the program. Now, that's why people like it. Ultimately, people have it, though, because a severe injury is something that we're all at risk for. I don't care how safe you are or how conscientious or cautious you are, we're all kind of at risk at getting injured at some point in time, and especially a lot of you, because a lot of you, drive going to your clients' homes. The reason, again, people have this policy, they like it for the little things, but they have it for the bigger things because it pays based on the severity. And essentially what that means is that the more severe the accident or injury, likely the more money you're going to get. A good example is a claim we did a little while ago where a gentleman was driving. He was sideswiped at an intersection. It wasn't his fault, didn't do anything wrong, but it was an accident. And he wasn't terribly banged up. He was in the hospital for a little while. He did have a surgery. He had some broken bones. This policy generated around $5,700. Now his deductible was about $4,000. That $5,700 helped him pay his deductible, and he still had money left over afterwards to help pay just whatever he wanted to. So it really stepped up for him at that point. It does, like I said, pay based on the severity. So if it was a more severe accident and he had spent more time in the hospital and there was more involved in his treatment, he would have paid more money too. The biggest claim that I've seen on this policy was a snowmobiling accident where someone was snowmobiling. He drove over some barbed wire fence. He was thrown from the sled into a tree. He was extremely banged up. It was not a good scenario. He was in the hospital for a few weeks, and this policy generated around $24,000 for him. So it was extremely helpful at the time of claim, but it really spent a lot of money to help him just make sure he didn't fall behind financially. If you are somebody who, again, sees yourself as potentially at risk for financial exposure due to an accident, maybe you have a higher deductible, or maybe you do use the chiropractor a lot, or you have kids who are involved, or maybe you're just involved, this is a great policy to look at. Absolutely make sure you talk to me about this policy. The next program we're going to talk about is the hospital policy. This is the closest thing we probably have right now for you that could potentially be described as an umbrella policy or gap coverage. And when I say umbrella policy or gap coverage, I mean that it's going to pay out for a sickness or injury. So again, the accident policy is just accidents and injuries. This would pay out for sickness or injury. And most times people will put it in place because they have a higher deductible or a higher out-of-pocket expense. And if there ever was a hospitalization situation, they want this policy to step in and help them pay that out-of-pocket. The way it works is for being hospitalized, there's going to be an initial hospitalization payment, anywhere between $500 and $2,000 based on what you want to set up. So for those of you who are looking to really protect a good gap, I'd say set up closer to a $2,000 initial hospitalization. But then, much like the accident policy, it's going to take a look at how long you were in the hospital. It's going to take a look at if you had any surgeries. It's going to take a look at just any area that it can claim on and continue to pay you. I'd say an average claim on the hospital policy, depending on the severity, can be between $3,000 and $5,000. The more severe it is, the more it's going to pay out. The less severe it is, the less it's going to pay out. But really, I would encourage any one of you that fall into that category of, I have a bigger deductible, I have a bigger out-of-pocket expense, and if I was hospitalized, or if anybody in my family was hospitalized, I don't know how I would pay it. If you do fall into that scenario, the hospital policy is a great policy to have. Also, for those of you who are looking to grow your family, maybe you're at that stage of life where you're going to start trying in the next couple months or the next year or so. A lot of people will put this policy in place for somewhat of a maternity benefit at that time of claim. So it's one of those times that you can actually plan it out and positively impact it. So I always say it's one of the only times we have a positive claim. But ultimately, I don't mean we have negative claims, but Aflac pays out. But ultimately, for those of you, again, looking to grow your family, it can be a very joyful event, and obviously it can be extremely expensive as well. So a lot of people will put this hospital policy in place to help them pay for that out-of-pocket expense. So if you do fall into that category where you do have a higher deductible, higher max out-of-pocket, or you are looking to grow your family, the hospital policy is a great policy to look at. The next policy I want to talk about is this green one. This is your cancer protection assurance. Essentially, the way this policy works is this is your cancer coverage. So, I'm sure everybody watching this right now at some point in time has experienced cancer in some way, maybe from somebody you know, maybe you've experienced it personally, but you've seen the impact that cancer can have. And you know that it's not only physically and emotionally devastating, it's also extremely, extremely expensive to fight. The average out-of-pocket with cancer with good health insurance, so for those of you with really good health insurance, the average out-of-pocket last year was $700, approximately $700 a month. And you think about it, if you're fighting cancer for 2 or 3 years, that $700 a month really adds up. The way this cancer policy works is if you are diagnosed with cancer, it's going to start by paying you an initial diagnosis benefit. And so that's just because the doctor said you unfortunately have cancer. The benefit is $4,000 for an adult or for a policyholder. If any of you have kids, the kids are automatically covered on this policy. So for any of you who have kids, it's going to double to $8,000. So the reason that money is there is because right now there's thousands of different types of cancers out there. There's thousands of different kinds of specialists. A lot of times those specialists aren't local. A lot of times there's experimental treatment that's involved, and you need to have somewhat of a cushion to help pay out. You never want to think about it, but if there is a child that comes down with cancer, and it does happen, unfortunately, you also want to remember that if that would happen, you want to be next to his or her bed. You or your spouse or your significant other want to be there with the child, and if that's the case, that's going to impact your income, because if you can't come to work, you can't collect a paycheck. So that's why we put those on there. From that initial diagnosis, it's going to take a look at your treatment. So much like the accident policy, it's going to take a look at things like chemotherapy, radiation treatment, blood transfusions, bone marrow transplants, experimental treatments. Let's say you have to run up to Mayo Clinic for a couple days. It's going to pay you for lodging and transportation. It's going to continue to pay you and pay you and pay you until you're done fighting it. And so the average claim on this policy that I've seen is traditionally between $20,000 and $40,000. The biggest one that I've been a part of and seen is over $100,000, and it's going to keep paying out and paying out. And that's one of the nice things about this policy, is that it doesn't hit a certain point and say, okay, we've paid you enough money. This is going to continue to pay out as long as you continue to fight it. So for those of you who maybe have cancer in your family, I'd say absolutely look at this policy. For those of you who don't have cancer in your family and just are a little bit concerned with what would happen should something happen, because the majority of cancers people are diagnosed with are not genetically transferred. So if something were to happen, this is one to look at. I tell everybody, if there's two policies you really, really, really want to look at, it's the accident policy and the cancer policy. These two are huge impactors when it comes to just doing a ton for you at time of claim and really helping you out. The other policy we have on a critical illness level, not the cancer one, but it's called critical care and protection. This policy is much like the cancer, only instead of identifying with cancer, it identifies with heart attack and stroke. So traditionally in the Midwest, we see that there's really two bigger concerns for people. They're concerned either with cancer or they're concerned with heart disease, and that being heart attack or stroke. That's why we separate the policies, because sometimes you're concerned with both. Sometimes you're only concerned with one. And for those of you who are concerned with heart attack and stroke, this is a great policy to look at. It works very similarly to the cancer policy. So for the situation happening, for the heart attack or stroke happening, we're first going to pay you about $7,500. That $7,500 again is just to get you ahead. You have to imagine, even if it's a mild heart attack, you're going to be hospitalized. There's going to be a lot of attention put to you, and you're going to have a lot of out-of-pocket expense when it comes to being admitted to the hospital. That $7,500 is meant for you to just initially cushion the blow and help you pay that out-of-pocket expense. From there, again, much like the cancer and the accident, we're going to continue to pay you based on the severity. So the more severe the heart attack or stroke, the more money we're going to pay you. I'd say, claims on this program can average between $11,000 or $25,000. Excuse me, for the more severe, heart attacks, strokes, or specified events. We traditionally see probably $30,000, $40,000, $50,000 paid out in this policy, but ultimately, again, much like the cancer policy, it's going to continue to pay you as you just take care of yourself and as you continue to seek medical attention. So for those of you who are more concerned with heart disease rather than cancer, this is a great policy to talk about, and this is a great policy to look at. The next policy we're going to talk about is dental insurance. So you have actually several different kinds of dental insurance made available to you through Home Instead here in Fremont and through John. We look at dental very differently than a lot of dental companies will, or dental insurance companies will. We really look at it from the standpoint of putting you in the policy that makes sense for you and for your family. And let's be honest, everyone looks at dental insurance differently. Some people are very concerned with the wellness, very concerned with the preventative, and they want to make sure that those things are covered. And maybe should something happen with a crown cavity or whatnot, they want to make sure it's going to pay out for that as well. But their biggest concern is paying out for the maintenance throughout the year. If that's the case, we have a great policy for you. For those of you who aren't really concerned with maintenance, but you're really concerned with bigger things, maybe you know that in the future there's going to be root canals, there's going to be replacements, whatnot, we do have a policy for you. Maybe some of you work through a dentist that does not have a network. Maybe the dentist just says, if you pay me cash directly, I'll knock off a percentage of the bill, and from there you can do whatever you want. We do have a dental insurance policy that literally will pay you instead of paying the doctor, and you can obviously use the out-of-pocket negotiation tactics with them or however you want to do it, and then the program will reimburse you that money. So it's a really cool setup. Again, there's not two people that are alike, I believe, when it comes to dental insurance. And for every single one of you, you want to make sure you're not jumping into a policy just because it's there. Because, honestly, of all these programs, dental is the one that you want to take out because you want to use it. If you're never going to go to the dentist and you're never going to get dental treatment whatsoever, don't take dental insurance out. If you are somebody who's going to go to the dentist, or you want to compare what you have right now, or you want to see what else is out there from an affordability level, or you want to see what else is better coverage, definitely talk to us. We have some great programs. We have some through AFLAC. We have some through UHC. We have some through a lot of different carriers, and we can find one that will tailor to you and to your individual needs. So if you do fall into that, make sure you talk to me about dental insurance. And then finally, the last program we're going to talk about is life insurance. So you do have life insurance through AFLAC if you want it through AFLAC. But we tell everybody that, honestly, AFLAC's not a life insurance company primarily. So although they have a really good life product that's extremely affordable, has low underwriting, and can be taken anywhere, oftentimes AFLAC's not the best life insurance. And so like I said from the beginning, we're not looking to push one carrier. And so through the consultative services you have through Home Instead, what we like to do when it comes to life insurance is get to know you a little bit, identify what kind of protection you're looking to put in place, identify what your health background is, and then based on how you answer those questions, we're going to bring 3 or 4 quotes to the table based on the lowest premium possible, and also based on the best implementation, the best claim payment possible. Here's the truth about life insurance, and this is something that most life insurance agents won't tell you, but you do not need traditionally a $2, $3, $4, $5 million policy. You just don't, because let's be honest, if you're ever to use this policy, you are not going to be the one to receive the claim. Unfortunately, and you don't want to think about that, but you do, if this policy is to pay out, it's because you passed away. And so when passing, people, sometimes everyone looks at it differently. Some people look at, I want to make sure that my funeral expenses are covered. I want to make sure any outstanding debt's covered from credit card, car payments, a mortgage is covered. And maybe you do want to leave something. Maybe if you're a primary income for your family, you want to look at a couple years or 1 full year of income and cover that for your family. So, while they're grieving, they can get on their feet and identify how they're going to make up the gap of income. Some people just look at that they want to cover the bare minimum. An average funeral expense goes between $20,000 and $30,000 when all's said and done, and that's a lot of money that you don't want to have to fall on your family or friends. And so here's the 2 things I want to let all of you know when it comes to life insurance. Number 1, it's extremely affordable. All right, we can find policies that are wildly affordable for you. That's not going to break the bank. That are great policies. Especially for a smaller one. Most of our policyholders who want to do a 10-year term, $50,000 life insurance benefit pay about $4 or $5 a week for it. It's not expensive at all. Again, if you do want bigger policies, we can do bigger policies too. So for those of you who are like, well, I do want $1 million policy, or I want a $2 million policy, or maybe you have something like that right now that you want to compare. We work with about 100 different carriers. So what we're going to do is we're going to plug your information in, and again, we're going to find the best policies at the best rates. And traditionally, we're able to get a good policy in place for you. For those of you who do have really good or not really good, but for those of you who do have life insurance in place right now is a great time to evaluate those products. And when I say evaluate them, I mean that today, because of how the mortality tables are, a lot of people are comparing what they have in place with what's out there and finding that they're able to put a lower price policy in place, and it's the same policy at the end of the day. We have a lot of people just doing that audit internally and finding really good programs to help save some money on a month-to-month basis. So if you do fall into that category where life insurance is important to you, or you don't have it right now, or you want to compare, definitely talk to me. Those of you with kids, you want to also think about looking at juvenile life insurance. Now, I do not mean for the worst case scenario. I mean, although it's something you want to think about, and you never want to think about it, but it does happen. Should a child pass away, it's going to be expensive to give them the funeral and those expenses to take care of. And you want to have something in place for that. Now, on a more positive note, I'm not necessarily thinking of that worst case scenario. There's really two other reasons that people, parents or grandparents will put juvenile life policies in place on their kids or their grandchildren. And the first reason is because there's a lot of juvenile sicknesses out there and juvenile diseases out there that will not result in that worst case scenario, but it will eventually, when they do get to that point in life where they want to take out life insurance, make it very difficult for them to get life insurance. So some things we see today are blood disorders, juvenile diabetes, juvenile cancers. There's a million things that when they do get to that point when they're an adult and they're like, hey, I need some life insurance to cover my family, they're going to go through underwriting, and if they answer yes to some of these questions that most would answer no to, it's either going to deny them the policy or it's going to really jack up the rate, which is going to hurt them at the end of the day. What a lot of parents or grandparents will do is they'll put what's called a juvenile whole life policy in place. Now, let's say it's a policy of $40,000, and let's say you're paying $2 a week for this policy. Essentially, the way this policy will work is if they're ever diagnosed with something, if they ever have, one of those unfortunate scenarios happen, no matter what, that rate does not change. And as long as they decide to continue paying on the policy, they can keep it for their whole lives. So let's say you take out a program, a $40,000 whole life on someone when they're 5 years old. And let's say when they turn 15, they're diagnosed with juvenile diabetes. At age 18, they have the option of taking over the policy at the original rate, and the face value will double. So that $40,000 policy, even though they now have juvenile diabetes, is going to go to $80,000, but the price is still going to stay the same at the couple dollars a week that it was when you took it out on them at age 5. Now they have $80,000 of life insurance that they're paying a couple dollars a week on for the rest of their lives. And at some point in time, should they overcome the sickness or the illness, and they can get better life insurance, they can then continue it or drop it or do whatever they want. But at least they have affordable life insurance. The other area that people look at it on is almost a form of investment. Now, it's not a true investment, but a lot of these whole life policies that we have on kids, and all of them that we use on juveniles, do build cash value. So let's take the same scenario. Let's say you took out a life insurance policy at someone at age 5. You put it in place, paying a couple dollars a week, and then at, let's say, age 18, they take it over and they continue to pay on it. And let's say at age 27, they decide to buy a house, and they're healthy, and they're looking at different kinds of life insurances, and they see that hey, they can get a much higher policy at the same rate because they're healthy. They can take that policy that you've been paying on over the course of the last 20 years or so, and they can cash that in at a pretty high cash value. The program we use and the carrier we use when it comes to juvenile life is called Securian, and it builds cash extremely quickly. For somebody in that scenario, you might see that they get $5,000 to $8,000 just paid to them because it was a form of cash value building investment, essentially, that you were able to put in place for them when they were younger. So Again, for those of you with kids, you want to think about it. You don't want to think about that worst case scenario, but you do want to think about it just to put something in place for them. Those of you with life insurance, you want to do a comparison. We will compare yours as much as you want. And for those of you without life insurance, you definitely want to think about it and definitely want to look at what we have. Again, it's going to be affordable. It's going to be painless to put in place, and it's something that you will own. It'll be your policy. So I really appreciate all of you taking a look at this video. I know John does as well. And again, I want to just lay it out that if you do have questions in health insurance, if you want to put the Teladoc system in place, or if you do want to look at your voluntary benefit options, I'm here for you. I'm your in-house consultant to answer all your questions. I'm here to do whatever you need and kind of take over the benefits program. John is very, very upfront with making sure you guys all have as much resources as possible when it comes to your benefits. And again, whether you participate or not, it's just pretty cool that John sees things the way he does. So I appreciate your time. If you have questions, feel free to touch base with me. If you do not have my contact information, touch base with Carly or John. They'll get me yours, and I'll be in touch with you, and we'll go from there. So have a great day, and I look forward to meeting all of you. Bye-bye.